Well, good afternoon. Good afternoon and welcome to another of our webinar Wednesdays hosted by Cal State Bakersfield Small Business Development Center. I'm Kelly Bearden. I'm your host today, and we've got a great program for you for Webinar Wednesday 358. Always popular to talk about the financial topics. And today, of course, it's how QuickBooks can save your small business time and money. And who doesn't like to save time and money? So we have our QuickBook expert in. We'll introduce him in a few minutes. But before that, let's go over a few other things. So what is up today on August 27th, 2025? Well, I got to give a birthday greeting first and foremost, as I see it is my cousin Diane's birthday, which is a milestone birthday. You get a milestone birthday on Webinar Wednesday, you get a shout out. And the person I grew up calling Dee Dee is celebrating her 70th birthday. Wow. It's great having an older cousin. So happy birthday, Dee Dee, and hope you're having a fantastic day. Because we're talking about the books today. Quick or not, we're going to get them ready for you. And you're going to need them ready for a lot of different reasons. One of those is to access capital. And, having good financial data and good financial reasons really kind of help once you start looking to access capital for funding. So we'll look at a couple of the things on how your records need to be intact and why and what they kind of look at. We're going to look at what your lenders are going to want as far as from your books, your reports, your filings. We'll have a little brief economic corner today, since we're focusing a lot on the financial side, a little bit, but some breaking news today on some of the early impacts that artificial intelligence is having on the workforce and on jobs. So just out today, I just couldn't pass up a chance to talk about this for just a moment or two today. We'll have other news, informations, and resources to help you thrive. We'll take answers to your questions live today after the presentation. So you can go to the Q&A box, or if you happen to put it in the chat, we'll find it. But the question and answer, if you put it in Q&A, we'll address those immediately after our special guest presentation. Also, our resources today are going to be in the chat box. Our producer, Maureen Busher-Dane, will be working the chat box today. And so everything that we talk about everything we talk about will end up in that chat box if it has a resource, a link that you can grab and use right now. So we do have a poll today. So let's go to today's poll questions. And a little generic. We kind of sometimes get a little funky with the polls here and get whimsical, but not today. We have a serious subject, your financial matters. So let's go to the first poll question of the day. And it is kind of a poll question that has been our summer poll question that we've asked on several occasions. We're going to share the information with you. We're waiting to get out of summer, so let's get to mid-September or so, and we'll have about 5 or 6 of these to report. But the poll question is, what are you optimistic about? We're all optimistic about something. What are you most optimistic about for the remainder of 2025 for your business? Is it greater sales, profitability, improved cash flow, more opportunities? Maybe you're expanding, resilience, and survival, which, is a good thing these days. And also, if it's something other, please go to our chat box and add it for today, and we'll get around to it eventually. So the first poll question is, what are you optimistic about for the remainder of 2025? Well, there's not much of 2025 left. This webinar will wrap up 2/3 of the year. We got a third left, and that third, what are you hoping and most optimistic about? Is it greater sales and profitability? Is it improved cash flow, more opportunities, perhaps to expand your business? Resilience and survival, and you can always go hit the other and put it in the chat box. And with 64% of you participating in today's poll, we're going to go ahead and end the poll. In the first poll, first of two poll questions, and share the results with you. And a 39% of you are saying you're optimistic that you're going to have more opportunities, potentially a chance to expand your business. 33% resilience in survival. And again, we say resilience is a good thing around here. Also, greater sales and profitability. And that would be 28%. So those are the three that got the lion's share of the votes. Thank you for participating in poll question number one. And so let's go to poll question number two. And poll question number two is going to be a little bit about today's subject. So it's going to be your QuickBooks level. And it is, how would you describe your level of expertise? Are you new, maybe needing some help? Are you working on getting better? Really good, but you need a little fine tuning, or are you an expert hoping for that tip or two that makes you even better? So a little bit of market research for our special guest today. Give him some information to the expertise that you know about QuickBooks. So, are you new? You're brand new to QuickBooks? Are you looking for some help? Are you kind of not so new, but you're working on getting better at QuickBooks? Are you really good, really good and need some fine tuning? Or are you an expert level hoping for a tip or two? And with that, what we're going to do is, whoa, 90%, 87% of you, boy, that's almost a record for a Webinar Wednesday poll, but we do have 87% of you participating. So with the 87%, we're going to jump in and go ahead and complete the poll at 90%, potentially a record, I believe, and share those results with you. And we find that 46% of you here today are new, brand new to QuickBooks, or new and needing some help. So you're either new or pretty new. 32% of you aren't exactly new, but you're working on it and getting better. So nearly 4 out of 5 of you are on the newer side of things. We have 14% of you that are really good. You're just looking to fine tune this thing, and 7% of you are experts out there. Congratulations, hoping for a tip or two. So thank you so much for participating in our poll for today. It goes a long ways toward helping our actual guest speaker today with his presentation. And so thank you so much for all of that. And let's move along. Okay. Our regular feature, one of them here on Webinar Wednesday, is our capital quarter. And our capital quarter is usually tied to the topic. Sometimes it's not. Sometimes it's its own topic. But capital quarter is, why are good records crucial for funding? So we'll talk about and tie in, you're here to get your QuickBooks fixed, and why, from a lending perspective or a borrowing perspective on your part, is that important? So obviously, it's important to know and understand your numbers before seeking access to capital. We like to think that when you come into the SBDC before you go to a lender, what we're doing is we're ironing out all of the details, all of the potential flaws that you have in your application. We're looking at your numbers to make sure that they make economic sense, and also looking at them from how a lender will look at them. So we want to see, and we want to assist you with your numbers before you get to a particular lender. And we also look at that because we want to be able to anticipate what your cash needs are, and possibly, borrow even more than you might be looking to borrow initially. So borrowing more than your initial need comes down to the fact that you oftentimes will want to be able to borrow once instead of twice. And it's easier, it's faster, and it's also oftentimes more beneficial for the borrower to do that and the lender. So understanding your numbers and your cash needs right now and your needs to borrow are one thing, but in understanding the possibility in borrowing more than your immediate need are even more. So in getting into that, you know, we did some things in the past that we talked about your factors that can limit your availability to raise capital. And two of the top things on there that we discussed were about financial ratios. And, we'll jump into the financial ratios potentially, but that is something that comes from your financial statements and which comes from having good books and having good financial information. So one of those is your debt to equity, and another is your cash flow ratio. And let me see if I can pull this up for you. And what I'm going to do is I'm going to pull up and go into our one of our great programs here called Vertical IQ. And this one I selected a particular industry. I selected the fast casual restaurant. And what this is Vertical IQ is industry data, it's industry information. It's one of the tools that many of our financial consultants at the SBDC use. And again, it kind of reinforces that particular need on these financial ratios on why and where it comes from. So on this, as I just kind of scroll down quickly, you'll see that there are financial ratios based on 100%, and your balance sheet is based on 100% of your assets. And also down here is the number of firms. So it shows your assets and your liabilities on your balance sheet, but it shows over here the percentage of 100% of what that kind of constitutes. So it's an easy way rather than dollars and cents. Using the percentage is a good way to compare how your business is doing with the industry. And why is that important? Because your lender is going to look at that. At all times, your lender is going to look at that. And I know not everybody's here to get a loan and looking for financing, but there is a time down the road to where oftentimes you will need that and you'll want your records in a good place. So looking at vertical IQ and being able to analyze your particular financial data against your industry that you're in is very important. So there's a balance sheet, there's an income statement. For example, in this industry, which is fast casual dining, you'll see that almost 39% of your sales are chewed up by cost of sales, which are oftentimes food, packaging, uh, and such, supplies, which would then show your particular margin, here being 61%. The nice thing is it also shows you a trend over a 3-year particular time. But then out of those financial statements, your profit and loss, and also your balance sheet, is you're looking at financial ratios. And the two that I just showed were basically your total liabilities to net worth, which is your debt to equity. And it kind of shows what the industry standard is there. And the other one that we showed was a cash flow coverage that I'll show an additional slide later. So, that is just kind of a quick synopsis on how that particular aspect works and how it's tied into your financial ratios are tied into lending. I mentioned your cash flow debt to service record or ratio. And, big banks, this is kind of a moving target, but what it does is it shows that the cash flow that you generate from your business is enough to service your debt. And, with like small community lenders, it could be 1.0. So if you have $50,000 in debt service, you need $50,000 in cash flow. So that's the middle range of that. But it kind of shows you how that can move around. And this is a ratio that can blow you out of the water almost immediately if you do not actually meet that particular ratio. So understanding these things and understanding how your financial information ties into funding is kind of a big deal. Another thing that we have is a weekly feature here on Webinar Wednesday is our Economic Corner. Sometimes it's our entire show. We have our resident economist on, but this is just kind of something that was breaking this morning, and it really kind of is the first thing out on impacting and showing how artificial intelligence is impacting jobs. And it was really kind of shown how it impacted new graduates. So maybe not all of you hire new graduates, but there's an opportunity if you're looking to do so. There might be a greater opportunity based on some of the challenges graduates are having finding a job based on AI. So I know that's perking the interest of several individuals out there, including maybe present company. But at the same time, economists found that fields where they could help people in their work rather than replace them. So there's a complete study that's out right now that hasn't been peer reviewed or published yet by 3 economists that just broke ground today. But on that, it was just kind of interesting. And I know that oftentimes, there's what we want to show as net profit, at least, don't we? Maybe some of you want more. But really starting off with that $100,000 of net income is always a good thing. So on some things that are happening in our community here, we have our community calendar, and in that we have our Kern County Hispanic Chamber of Commerce, which has an annual business conference and expo. It's tomorrow night. Come down and see the SBDC. We will be there. Come and say hi. We'll be there from 4 to 7 at the expo and networking session at the DoubleTree Hotel. Also, our free human resource hotline that is provided to you by the California Employers Association and provided by many of the workforce development boards throughout the Central California region. There's a list of the counties and their phone numbers. You can get an access. It's a great place to start if you have a question regarding human resources. It can oftentimes be the salvation for actually solving that particular issue that you have. There's our toolbox, our busy toolbox. I agree. We need probably a bigger toolbox here because that's a lot of resources that we have to pile in there. You saw a little demonstration earlier from our vertical IQ tool, which many of our advisors have access to and can help you take your particular financial information. And that is just one of the things vertical IQ does. It can really show you how your industry is ranking and how it is doing with other industries. And there's a little bit of information on the vertical IQ that is invested in your success and in your particular business. So we can get back to, there's a big, beautiful bill that was floating around for a while. You know that this is my big, beautiful bill, $100,000 bill. Again, thank you so much to our sponsors out there, Kern County, California, the U.S. Small Business Administration, the California Office of the Small Business Advocate, our Blue Tech Valley program, and CenCal Business Finance Group, our our College of Business and Public Administration at Cal State Bakersfield. Thank you so much. If you would like more information or you would like to talk to one of our advisors with some confidential, no cost, no obligation expert consulting, go to our CSUBSBDC.com. The gentleman that I'm getting ready to introduce right now is one that can assist you. You can sign up and talk to Arleigh Cortez, who is a QuickBooks Pro and a CSUB SBDC Associate Consultant. The CSUB Associate Consultants are still student undergraduates in most cases that are working with the SBDC to help you in your business. Here he collaborates with our senior business advisors and their clients in preparing a lot of different things: business plans, financial projections, industry analysis through vertical IQ, and also using LivePlan to help you. He has a diverse background in entrepreneurship, real estate accounting, a lot of different unique skills that he can help you. He's passionate about helping people, empowering individuals and families achieve a worth living legacy worth living. Boy, I sure had that. Arleigh, it's great. Let's bring you in here. It's great to have you in here right now. Get you in here in the full picture and let you take it away.
Hey, Kelly. All righty. Thank you so much for that introduction. Really appreciate it. And it's a life worth living and a legacy worth leaving. Just to kind of clear that up for Kelly there. Very interesting. And by the way, very interesting results we have our audience here. I think I nailed it with the presentation and can really help a majority of audience with what I'm going to present. How many of you know for certain if your business is truly profitable? Just because you're making sales, it doesn't mean you are profitable. Just because you're making payroll, it doesn't mean that you are profitable. Just because you're paying your bills, it doesn't mean that you're profitable. Now, that's if you can't see it on your financial statements, right? The only way to really tell if you are absolutely profitable is by having accurate financial statements. Now, you're probably thinking like, Arleigh, I came here for QuickBooks, right? And not about financial statements or account. And so, yes, you will be getting valuable QuickBooks Online tips that you can use today. All right. And the reason we want you to have these tips is because we know most business owners are not bookkeepers, nor do they really want to be bookkeepers. And so that's why we want to come over here and help you with your QuickBooks Online usage. So that way you can have accurate financial statements, which provides you a path to more profitability. Um, and that path to more profitability is from cash flow management. And of course, effective cash flow management is done with accurate financial statements. And again, let's be honest, you don't want to do the bookkeeping. You want to focus on doing what you do, and that's sales or the reason you're in business, whatever that means, building something, providing a service, cooking, whatever your business is, that's what you want to do. You don't want to get into that computer and do all this bookkeeping stuff. And let's even be more honest, you probably don't want to pay somebody else to do it, at least not right now where you're at with your business. But the other truth is you do need to have your booking. It is amazing how many business owners do not know or do not have their bookkeeping cleaned up or on par or even have any accounting system at all, and they're just flying by. And also, I did want to mention that we'll have something for you after this presentation, and it's not going to cost you anything. So stick around. I think you'll appreciate what we can offer you after this class. And again, it's at no cost. All right. Now, I do have a story. Before we begin, I do have a story for you guys. Excuse me. Let me just. I do have a story for you guys. Um, Here at the Small Business Development Center, our team has actually helped entrepreneurs like yourself get funded by lenders to a cumulative total of $100 million, right? And that's not just, 2 or 3 big deals, right? Like, $50 million deal, $20 million deal. No, these are nickels and dimes, right? And we actually, and I want to talk about one story is where we had a client, he was actually looking to expand by buying an additional restaurant for his business. And he actually went to the banks by himself. And what happened? Well, he got denied. And then he heard about the Small Business Development Center. He came to us, and what we did for him was we provided no cost business advising for him, and we actually helped him. We helped him with his financials. Not only did we look at his financials from his business perspective, we also looked at the personal perspective, right? Because that's absolutely important as well. You got to have a good looking personal financial statement. But we helped him with his business financials. We cleaned that up, And because we were able to clean that up, we were able then to create a awesome forecast. And an awesome forecast, what an awesome forecast is really is one that you can defend, right? And if you're creating a forecast that where and you have history in business and you don't actually have accurate financials, you cannot have a defendable forecast. On top of that, we use our tool that Kelly had showed you before, which is vertical IQ. I like to call it industry intelligence. And with that industry intelligence plus some clean financials, we're able to create a great forecast, present that to the bank, defend it, and as a result, was able to get our client the funding he needed in order to acquire the restaurant. Now, I'm gonna give you some tips on QuickBooks so that way you can come up with accurate financial statements, but also so that way you can save some time. Okay, and if you save time, you can become more profitable and even save some money, right? But some quick facts before we begin. 80% of QuickBooks Online users, when they use the features of automation that QuickBooks provides, they save significant time, right? In fact, the average owner saves 21 hours per month on bookkeeping by utilizing the features or some of the features that I'm going to show you. And that allows you to reclaim some hours, right? Which you can reinvest in sales, service, and growth. And as I will mention later on, because you're able to save these hours, you will be able to analyze the financial statements that you are creating with QuickBooks so that way you can manage your cash flow better and become much more profitable. All right. So the very first tip is master the bank fee. All right. Now, when most business owners buy QuickBooks, what they do is really all they really do is they connect their bank account, right? It's real easy. Just click a button, you log in, you connect your bank account. Now you see all your transactions in what is called the bank fee, right? And then their process for bookkeeping is they look at this bank fee and then what they do is they categorize off the bank fee, right? So let's say, for example, you spend some money at Home Depot for some repairs and maintenance, then you're going to go into QuickBooks. You see that, you categorize it as expenses, right? And what they do is they do this line by line, one thing at a time, right? Now, with QuickBooks, you can actually automate that categorization. And you probably know this for those of you who are using QuickBooks already. You probably know you can categorize a transaction, right? But the tip here, the real tip, is that what you want to do is use multiple conditions to your rules, right? Because you set up these rules which will automatically categorize specific transactions. But when you actually have multiple conditions, you can save time by allowing QuickBooks to know exactly what that transaction is for. And let me give you an example, right? Let's say you're driving and you go to the gas station, and you go to what I do is I go to the same gas station just about every time I fill up some gas, right? But there are times when I don't go to the gas station to fuel up. Instead, I'm just buying maybe snacks or whatever. And so, when I do this, right, I have a charge that's coming from, for example, I go to Fast Trip here in town. I have a charge for like maybe $7. And then I also have another charge for like $55, right? Because it takes around $55 to full tank my or full to make my tank full, right? And then what happens is in QuickBooks that in the feed, you'll see the $50 charge and you'll see the $7 charge. Now, if you're using rules without the multiple conditions, you're probably telling QuickBooks to categorize fast trip transactions as fuel, right? But you have that $7 charge. Is that really fuel? No, that's something else. So you want QuickBooks to automatically categorize that. But in order to do that, you need to create rules with multiple conditions. So one rule you can create is that when you have a charge from Fast Trip and create a condition where it has more than $50, then most likely that is fuel, right? And then you can add any transaction with a condition that is less than $10, that is a miscellaneous item. Okay. And then if you put it, you can put a range. You can say, hey, if the bank transaction amount is more than $10 and let's say I don't know, $100 is just an example, right? And you're going to Office Depot for your, or I'm sorry, Walmart for your, for whatever you do, for food, for office supplies, anything. But you notice in the course of business that you're always spending around $30 for your office supplies, then you can give it this range and actually have it categorized as office expense all the time, right? Or if you're, maybe you accidentally, or maybe not accidentally bought some groceries with your business card, and you know that you spent $100 at Walmart for groceries, then you can tell QuickBooks, hey, every time it's groceries, make this a personal expense, right? So by doing this, by categorizing and using multiple conditions, you save time, right? And I think the stat out there is that if you were to able to do up to 300 transactions, I know that's a lot of transactions, but that's 3 hours of time saved. Okay. All right. So let's go to tip number two. Tip number two, the recurring transaction. All right. So I'm sure there are some of you in business where when you create an invoice or you get billed, there are multiple items on this bill or multiple items on the invoice, and it takes a while to fill out all that information on the invoice, right? Well, what you can do is use a recurring transaction feature. Now, there's two of them. There's one that's a recurring transaction feature where it's coming in like clockwork. And like if you set it on the 5th of the month, it's coming in on the 5th of the month, right? But the real gold here is doing the unscheduled recurring transaction. And that's for these invoices that you create where you don't have a timely, like clockwork sale or invoice, right? Or a bill, right? Let's say, you're a consultant or you're a contractor and you have these projects, right? You have these projects that have so many line items on them that when you create this invoice, it just takes too much time and it's annoying because you're doing this annoying data entry. So what you should do is create that first time, create that one invoice or that bill, fill it all out, and then save it as an unscheduled a recurring transaction. And then what will happen is when you come around and you have to invoice that same exact invoice again, all you have to do is just go into your recurring transactions and then, sorry, it's flipping on me. Go to your the unscheduled transactions and then just click open the transaction and boom, it's pre-filled and all you have to do is just fill out the data that changes or maybe just the customer, right? So now what happens is what took you 15-20 minutes to create an invoice takes you like 2 minutes, maybe even less, because all you have to do is just put the customer name. You just type because you do a little bit of typing, the customer name will pop up, click it, hit save and send, done. And that's seconds. Imagine if you had to create 10 invoices, and that took 20 minutes each. That's what, 200 minutes. So that's around 3 hours and more. But then now we just reduced that to 1 minute. That took you 10 minutes. Wow. What can you do with 3 hours? 3 hours more of your time, right? I'm sure you can make a bunch of more money, right? All right. So that's tip number two, the recurring transaction, specifically the unscheduled recurring transaction. All right. The next one will be utilizing the undeposited funds account. Okay. So when I was a bookkeeper for a consultant here in town, he actually owned multiple businesses. He also owned 52 units, 52 rental units. So I did the bookkeeping there. I was in charge of taking the payments and also depositing those payments. Now, generally, what business owners who are not bookkeepers or don't know how to do bookkeeping but use QuickBooks, generally what they do is when they receive a payment, they automatically deposit that payment into the bank account in QuickBooks, right? Every single one, right? Every single payment you get, you deposit it into QuickBooks, into the bank account. That actually creates reconciliation nightmares, right? So when I was over here working with the consultant when I first started, I was a fresh bookkeeper. What I would do is do that exact thing. Now, let's just talk about 52 rental units, right? So 52 units, I'm receiving payments and I'm depositing right into the bank. And the problem was it did not reflect what was actually really happening. You see, because what would happen is I would collect, maybe 30 units because, you got the first to the fifth, right? So the payments are coming in from the first to the fifth. So maybe the first batch would be 20 payments. So I get 20 payments. I go to the bank and I make one single deposit with all 20 payments in that one single deposit. Then I get the second batch and then the third batch. And then now when I come to reconcile my books, right, I have all these single payments, right, that have been entered into the QuickBooks, and I have to figure out which 20 payments is for this particular deposit. Oh my gosh. That was a lesson learned for me, right? Because I had to do a lot of calculation, and if you use a calculator and you have to add 20 items, sometimes you can make a mistake, so you have to start all over, right? And that's what I did. And then that's when I figured about the undeposited funds. The undeposited funds, what you do is it reflects reality. What happens is you take a payment, you deposit when you get to QuickBooks, you deposit that into the undeposited funds. And then when you actually make a deposit into the bank, what you're going to do is you make the deposit, then you come back to QuickBooks and you create a deposit coming from the undeposited funds account, select the payments that you deposited, make that one deposit in QuickBooks, and then boom. All said and done, when you get to reconciliation, you see the deposits match, check them off, you're good to go. The books would match the bank every time, and just that one fix saves you hours of troubleshooting that you won't have to do if you use the undeposited funds account. So please use the undeposited funds account. Don't just deposit those payments as soon as you get them. Put them in the undeposited funds until you actually deposit them, and then create one single deposit with all those payments there. All right. Tip number 4, the QuickBooks app. All right. So whenever we have a client here who needs help setting up their QuickBooks, I always emphasize the QuickBooks apps. If you didn't know, QuickBooks has a phone app. Yes, it comes with a phone app. It's free. You can use it, and it is awesome, right? Because as I alluded to earlier, what business owners do is they buy the software and then they just categorize straight from the bank fee. That's not bookkeeping, okay? What bookkeeping is this. You need transactions to be entered into QuickBooks, and then from the bank feed, you need it to match those transactions. That's what's bookkeeping, and that's what keeps it accurate, right? Now, with the QuickBooks app, what you can do with it is you can actually, when you go to the store or wherever you go to spend money, you can actually, and when you get a receipt with the app, you can snap it, right? You'll snap it, and right there you can categorize it. And really what you're doing is entering this transaction into the software. And on top of that, you can store a picture of the receipt. So now you can even just, throw it away if you want to, right? I'm not gonna tell you what to do, but I would personally, if I have the picture already, that's my proof for the IRS when they come, I'll use that, right? But you get to snap the receipt or an invoice, right? with the app, and voila, it's in your system. And then here's what's cool, right? With the bank feed, you can now also do what is called auto match, right? So as soon as you enter that receipt and it hits your bank, you don't even have to go to your computer. What QuickBooks will do is it will auto match the transaction and it'll already categorize it for you, right? So it's a step above rules, right? And you can do that with the QuickBooks app. On top of that, the QuickBooks app, you can keep it on and it will track your mileage for you, right? Like I used to be an Uber driver and I used this, right? And it was a lifesaver because I did get audited, right? Um, Out of nowhere. And by the way, if you think you're not going to get audited in your business career, think again, you will, right? Um, all you have to do, don't worry about it if you're not lying on your tax return, right? But keep the proof. But this right here, the track mileage feature helped me because he's like, you need a third, I don't even really want a journal, right? But you need something outside. I said, oh, I got QuickBooks. Like, okay, great. So that worked, but it will track your mileage. And the thing is, you don't have to like go into your phone every time and turn it on to track the mileage. What happens is it knows when you start moving for some reason. It just knows, right? And maybe it's because you sit in one spot for an hour or so. It just knows. And it tracked my mileage, I would say 99% accurately. Okay. And this will allow you to manage your cash flow on the go because you'll be able to see reports there. And of course, you can stop putting your receipts in the shoebox, okay? Because you can take pictures of your receipts, take pictures of your invoices, and all that. So use the QuickBooks apps because this is what's going to help you uh, do real bookkeeping, which is again entering transactions, right? Based on the source document, such as a receipt or invoice, and then matching it to what is actually going in your bank. All right. Tip number 5. Now, all of this culminates into what the reason we need bookkeepers and the reason we have QuickBooks, and that's because we want to come out with reports that's going to tell us how our business is doing and how and what decisions we can make. Okay. Now, QuickBooks already has some reports that's easily accessible, your P&L, your balance sheet, as well as your cash flow statements, and a myriad of reports. But the key here, the tip here, is to customize your report. And on top of that, once you customize the report, and the reason you're customizing it is because you want specific reports for whatever decisions you make, right? You build that customization and then save it. Okay. For example, you can create a trailing 12 P&L. What that is basically your last 12-month P&L, right? So that way, every month you look at that report, you can see the trends in your business, what's going on in your business from the last 12 months. And I advise that you do that, right? Analyze that statement at a time. But you create that statement and then you save it. So that way, you don't have to keep building it. You don't have to keep, making multiple clicks. All you have to do is just once you get to Report Center, it's there, it's ready for you. Okay. And now here is the real gold here too. What you can do is actually, once you customize these reports, you can have QuickBooks to send these reports to you by email as frequently as you want, right? So you can have your P&L delivered to you every Monday morning. You can have your cash flow statement, your balance sheet delivered to you every single month, right? And that is the key here. We want you to get into the habit of analyzing your finances so that way, when you're analyzing your finances, you can become more profitable. All right. And so these are the 5 tips that I wanted to give you guys, right? These are using the multi-condition bank rules, and then creating the scheduled recurring transactions, using the undeposited funds account, using the QuickBooks Online app, and also saving and getting those customized reports sent to you. And again, this will save you time That I guarantee. And when you begin to implement these tips, what will happen is you'll have created accurate financials. It will save you time. And then with those accurate financials, you can make better decisions to become more profitable. And an additional benefit is it can open doors and create opportunities. Why? Because if a banker came to you and said, "Hey, I want to give you some money, but I need your financials," would you be ready for that? If you implement the tips that we give you today, then you are at least closer, because I don't know what you're going to do, but at least closer to having those accurate financials that you could give the banker. Now, with all that being said, I do want to mention that all these tips can be sabotaged by an improperly set up chart of accounts. The chart of accounts is the foundation to your bookkeeping, and you already know you cannot build on a weak foundation. So what's an improperly set up chart of accounts? Well, here's what most business owners do, right? When they go to their create the chart of accounts, they buy something, they swipe their card, and then they see the transaction come in and they don't know where to put it. So what they do is they create an expense account. For example, they'll put like Chevron. They'll do Chevron for the gas. They'll do Fast Trip for the gas. They'll do Arco for the gas. So you have multiple gas accounts when all you really need is a fuel account that summarizes that, right? Or another mistake is they only use one sales account instead of having the 4 items that sell in their business, right? You need to see what each product is selling for. Or like, if you're a restaurant owner, how much is your coffee selling for? How much are your entrees selling for, your a la carte items? Okay. And so that's basically what a messy chart of accounts is just having these bloated accounts, or even more importantly is categorizing expense as operating expense versus a cost of goods sold. And that's an important number. All right. And as you see here on the slide, improperly set up charts of accounts equals messy financials, and messy financials makes it hard to analyze. So with that being said, don't fret. We want to help you. As I said, we got something for you here. We want to provide you some no-cost advisory. So sign up for some no-cost advisory. And with this, we'll review your chart of accounts and help you set up the correct chart of accounts. We'll review your books, help you and advise you on how you can clean those books up. So that way, if you're looking for funding, you'll be able to have lender ready forecasts and financials. And on top of that, when you sign up for a business advisory, here are the benefits you get. You get dedicated business advisors. It's just like having your own personal board of advisors, but at no cost. Okay. We'll also help you with your business plan by allowing you to utilize some live plan software. It's a software that allows you to create business plans and SBA ready financial projections. On top of that, we'll give you some real-time industry intelligence from Vertical IQ, and you'll always be able to give us a call and set up a one-on-one strategy session whenever you need.
Q&A box is rolling today.
Ooh.
Okay, so if you got questions, go ahead, hit the Q&A box. Let's start with the first question is, I have multiple rentals in a separate operating business. Should I keep one QuickBooks company file with classes, locations for each property, or separate files and consolidate?
Well, I would advise, because they're separate businesses, that you would have separate files for them. Obviously, you can customize QuickBooks to, include it with the classes and locations, but I would have separate files for them. As far as for the rentals, I would use classes and locations to separate the units.
Okay, great. Joe asked, switching, PC version versus the internet version, two different types of products available through QuickBooks. And Joe appears to be switching mid-year for perhaps from PC to internet. What do you recommend as far as PC to internet?
Well, to be quite transparent with you, I've used desktop for only a little bit of my career. And also I am trained very well on QuickBooks Online. And I really do like QuickBooks Online, much more so than the desktop version. And that might be because I haven't used it as much. I will tell you though, a lot of people are hesitating to move online for various reasons. But you know, we're in that time where Intuit is trying to get everyone to go online, and eventually that's where it's going to be. Plus, I believe it's just much more convenient. You can access it anywhere, you know, and you got the QuickBooks app as well with that. And so I would really recommend QuickBooks Online.
That is definitely the wave, it seems like, of the future.
Absolutely.
So, what is the average cost for QuickBooks? They have mostly subscription models now, based models. And I think back in the day, way back in the day, they would have a desktop version that you would purchase, and then you would purchase upgrades. So, can you explain a little bit about what it costs to get started in QuickBooks and use QuickBooks Online?
Well, for QuickBooks Online, there's three of subscriptions that, main subscriptions because, well, so three main subscriptions, which we have Simple Start, Plus, and also QBO Advanced. Simple Start, I believe, if I can remember correctly, it's $35 a month. And then Plus is 75, and then Advanced is like 125. Now, don't quote me on that because QuickBooks from time to time does have some promotions. Like for example, in the beginning of the summer, they actually had a promotion where it was 90% off for the first 3 months.
So your Plus at $75 and your Advanced at 125. What
Per month.
features are you getting with that?
So with Plus, you start to be able to use what you call that? Classes and location. So now you'll be able to have, if you have, multiple locations, or you want to be able to basically use the classes locations to detail out, like for example, certain line items for revenue and how much each costs. You can use that, right? The advanced feature now you can actually you have projects feature, right? It's a little bit more advanced than classes and location, but you have actually projects feature, and on top of that, you have like a backup feature where you can, if you mess up, you can actually go back into a certain point in time for that. So that's one of the advantages of advanced. And plus with advanced, you really get the premium customer service there.
So is there, if you have multiple businesses, is there a separate fee for each business, or can you consolidate them under one legal entity?
You would need a different subscription for each entity. Absolutely.
Here's a question on nonprofits. Would you also be able to help a nonprofit organization set up their chart of accounts? And let me answer that one. Yes, we do offer, we like our nonprofits to have a tie to business. Overall, we are here to serve for-profit businesses, but present company, it really sees a need to assist nonprofits when we can. So there is limited help we can help with nonprofits. More questions. Boy, they keep coming in.
Yeah, they do.
Let's grab this one. Sorry, I can't grab them all right now. But there's with QuickBooks, there's a lot of coding going on. And so is there something that you see that is more common to be miscoded in QuickBooks?
I would like some clarification as what you mean by miscoding. Do you mean like, the software, or are you talking about, I mean, I'm unclear as to exactly what you mean by miscoding.
And while we wait for clarification, let's run over to the chat. And not the chat GTP, the chat box. And after a wonderful greeting from Maureen, there's some wonderful greetings and salutations. There are resources such as the wonderful study out today that I talked about that's very detailed. And I would wait for our Webinar Wednesday resident economist to come in and explain all that to us. That's what I'm going to do. Also, Yeah, so I think a lot of the information has been answered there, going back and seeing questions and answered, seeing if we missed any as we're running low on time, Arleigh. Um, can you, can we, can we use the tips you shared in the simple startup subscription?
Actually, let me see. I got unscheduled. I got, yes, actually most of the, yeah. In fact, I did that on purpose, because I wanted to make sure that, every subscription level actually had the tips. But yes, you can actually use all the tips that I provide. These are some basic tips, that I provided, but highly overlooked. And again, these tips, are great tips, and even just using Simple Start, you can apply these, and that's what's great about QuickBooks.
And we're out of time.
All right.
So thank you, Arleigh. Great work I've seen him do with a lot of businesses. He's refreshing for the financial problems that small businesses have. We'll be back next week with Webinar Wednesday number 357. And 357, we're going to be talking about rollover of businesses and how retirement funds can actually be used. Now, I use this disclaimer every time I say that. I don't recommend you use your retirement funds to start a business, but the simple fact is people come in here all the time wanting to use 401ks, IRAs. So let's set it up right and do it to where there is no tax consequences or very minimal at best. And we'll be talking about that with our special guest next week. So for this guy, Arleigh, I'm Kelly Bearden. We'll be back next week with 357. Thank you for joining. Goodbye, everybody.